onto the China stuff. Okay, so this is key. Opinion follows trend. So, all the same people writing negative stuff when the price was negative are now trying to find positive stuff to justify, to understand why there's been a 40% rally off the lows in the last 4 weeks, and you had the record months in Hong Kong and Chinese equities, with Alibaba 50% off of its washout lows in October in just the last few weeks. And what they come up with is, look at this headline. Super rare signal suggests Hong Kong stock market has hit rock bottom. Super rare signal. They're looking at the RSI. This is like kindergarten technical analyst school. Anyway, I use it all, by the way, but I joke, there's this guy, I put out the article this morning, the Grinch is canceled, right? And this guy on Twitter replies to it because the Dow was down 400 points for 2 minutes this morning. And he replies, looks like the Grinch is still in town. And, I just said, patience, cowboy. It's a long month. And I was tempted to say to him, because he sent a picture of the S&P with silly lines drawn on it. And I was tempted to say, did you know that we fundamental analysts actually invented the CMT designation just to create liquidity to get in and out of our positions from folks like you? But I restrained myself. No, look, there's value. We use technical analysis just to help with entry and exit points. And, but as far as it being predictive, come on, folks. So this magical, super rare secret signal called an RSI, which is amateur hour, is showing us a crossover. That said, it is super rare, and if you were buying when it was at extremes like this, you made a lot of money. So it makes perfect sense. Why wouldn't you pay attention to it? Nonetheless, there we are with the super rare signal. Now everyone's trying to justify why did these stocks go up 30, 40, 50% in weeks? Why? Because the dollar went down. It's exactly what we've been saying was going to happen. The commercials are always early. The commercials are always right. And sure enough, you had a little pivot, et cetera, et cetera, et cetera. But China investors look for a turning point after $370 billion rally. Opinion follows trend. You're going to see more of it. I mean, wait till Baba's over $100. You're going to get people on the TV. Number one, you're going to get the ones that are super negative trying to drive it down because they're like, holy cow, I just missed 40 points. And they're pissed. And they're the ones that sold in the hole, and now they've missed 40 points, so they got to talk it down. And then you're going to get the ones that, after a huge 50% move, are going to start chasing it up, and then you're going to get a fake out, and then it'll take them out at a loss, and then it'll run back up again and rip their face off. It's just psychology over and over and over. So catching the big trends, identifying catalysts for sustained moves is critical. So they have the price moving in, and then they attach a story. Reopening bets are now the new narrative, but at the end of the day, it's all about the dollar. And that stuff was going to wear out on its own one way or another. Now, fortunately, Xi has a little urgency because people are protesting in the streets. And like Bob Chapek of Disney, when I said a week before Iger came in, if you can go back and look at the tape, I said either Chapek's going to make huge cuts or he's going to get cut himself. Sure enough, the next Friday, he was cut himself. And the same thing's going to happen with Xi Jinping. And we've been saying that eventually people can only take so much. So either he pivots hard on this, which it seems like he has this week, or he's going to lose his power. One way or another, it's going to be over. I mean, the people are going to, you got 500 million, educated middle-class people with a slow economy locked up like animals in their houses. They're not going to take it anymore. People can only take so much. And I think the breaking point, besides that fire in the apartment building that people were locked in, was they watched the World Cup for the first few games and said, holy cow, the rest of the world is out having fun, not wearing masks, and we're locked in like animals. Our government is screwing us. And that is critical. So then what they did was they edited out all of the stands and just had fuzzy faces so people couldn't see that. But everyone knows. And the cat's out of the bag, and they've got to make the pivot. And they're doing the pivot, and that's why you're seeing follow through. But So more of this central bank boost stimulus to aid COVID hit economy. China cuts reserve requirement by 25 basis points, boosts economy with 70 billion of fresh liquidity. China pledges 162 billion in credit to developers, shares rally, etc., etc., etc. Now on to the U.S. Tom Lee talking about the headwinds of 2022 now becoming tailwinds starting now. Inflation, obviously, the Russia-Ukraine war is in stasis, but we're getting the oil anyway through India and China. That's why you're seeing crude down. Food price index set to be negative year on year. Goods prices tanking. 10 years now, he said, from 4.2 to 3.7 is now 3.5. Fed is becoming more predictable. He was really a pivot. We're going to cover a little bit in a minute. China's easing. He says possibly easing. Now they are easing. CEO confidence is bottoming. It's already bottomed. And expensive stocks have already been derated. So all the conditions are there. Caxton reported that Beijing has set hard KPIs for local government by end of January. 90% of the people aged over 80 who meet the health criteria must fully be vaccinated and receive booster shots. The current number is 66%. China is about to start a massive vaccine campaign. So they've been trying to protect the elderly. Now they're saying you're taking this vaccine whether you want it or not. And once they get them all vaccinated, the doors are open, and they're just going to say, and they've already been creating the narrative. They say this variant is not deadly. It's like the flu. So once they get all the older people vaccinated, it's game on. And the market's it's starting to sniff that out, but it's really going to sniff it out in coming weeks. And even though the cases have gone up, although they started to come down a little bit, it's irrelevant now. It's over. Xi got the message. He came very damn close to a Tiananmen Square issue. Macau finally draws a winning hand. They got all their licenses. No change there. These are all doubles and plus. We've got some Melco. Win in Vegas Sands will work. They're all home runs. COVID lockdown. China COVID unrest boils over as citizens defy lockdown efforts, so they're rebelling. This is huge, and I've been talking about this. So the government saw Alibaba as a threat. Now the government desperately needs Alibaba. China enlists Alibaba and Tencent in fight against U.S. chip sanctions. So I've been talking about their cloud chips, their AI chips, etc. So now Alibaba and Tencent are going to be major players in the chip game for China. The government desperately needs them. One hand washes another, and off to the races. So what was a tailwind is now a headwind. The government has to, what was a headwind is now a tailwind. The government's got to help them, support them. And what do they need to invest in R&D? They need profits, and they need growth, and they need consumption. And the government now wants all of that. China loosens grip on COVID exactly 3 years after the first ever case. Official says COVID fight in new phase. Concessions emerge. First documented COVID patients. Okay, so up to December 1st, I guess, of 2019. Okay, et cetera, et cetera. Emerging market stocks and bonds stage powerful rebound rally. Best month for emerging market debt in 24 years. So this is a big deal. And why? We covered this last week. The last shall be first. Look, emerging markets were last in 2018. By 2020, then they were like fourth, then they were second. They were last year. They moved up barely this year. Next year, they're going to be at the top of the list. I can say that with my eyes closed. Look at 2015. They were second to last. By 2017, they were on top. 2008, they were on the bottom. 2009, they were on the top. 2011, they were on the bottom. 2012, they were third from the top. 2000, they were on the bottom. 2003, they were on the top. So here we go. Emerging markets and REITs, the last shall be first. REITs is just a bond trade. You say, well, real estate, are you out of your mind? This is not, the 5 houses, in your neighborhood in Palm Beach that have gone up 80% in the last 5 years. REITs are a different game. They trade on, even if their price goes down, their rent should be going up, depending on the asset type. So if you're picking the right ones, these are going to make money. And